The United States is officially in a recession. At least that's what Cathie is claiming. But the White House disagrees, and Biden says, "It doesn't sound to me like a recession." It seems like at this point, politicians are changing the definition of anything to suit their agenda. Inflation is super high, but they will tell you, no, it is not. We don't have an inflation problem. It's under control. I mean, prices are rising faster than ever. How on earth we don't have an inflation problem? Thank God the Fed finally admitted the problem and raising the rates to fix it. A recession is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 consecutive quarters. So if we have 2 consecutive quarters where the gross national product grows by a negative percentage, then it's a recession. And if it lasts over 2 years, it turns into a depression. I remember back when COVID hit the world and Trump was the president, they accused him of everything possible, lying about everything. He mismanaged COVID and the economy fell into a recession. But now Democrats are also mismanaging the crisis, and instead of taking the responsibility for their actions, they're literally changing the definition of the word recession. Apparently they tried to change the definition in Wikipedia, but they couldn't. I never thought it would come to that. Soon, numbers for Q3 will come out, and I wouldn't be surprised if they are going to be negative as well, and inflation will most likely stay high, which means the Fed will keep hiking the rates, which means more expensive mortgage rates. House prices already cooled off as the demand is vanishing, but builders are building more homes, although they are still rising, but far from the rate they have been in the last 2 years, and in many states, prices are actually declining. Sellers no longer have the upper hand to negotiate and push buyers to overpay. From the moment COVID-19 started to this day, median house prices grew from $322,000 to $440,000. Even prior to the 2008 housing crash, prices didn't grow that much, which has led many experts to believe that we might be on the brink of another real estate catastrophe. Will home prices finally collapse? Is the crash going to be as painful as the 2008 crash? We will answer all of these questions and many more. But before we do that, give this video a thumbs up and let's dive in. The economy is one huge organism. If one part of it suffers, it affects the rest of it. Think of any economic crisis. It didn't just influence itself, but took down with it the rest of the economy. The 2008 housing bubble is a perfect example. The entire world suffered. From January 2008 to February 2009, the S&P 500 fell by almost 50%. The housing crash in the US led to the euro debt crisis, crushing one economy after another in Europe. Countries like Greece are still suffering from the consequences of the crisis. Even Apple, which has nothing to do with the crisis, fell by over 50%. Trillions of dollars were wiped out of the market. So if we want to find out what is going to happen to the housing market, we have to consider what is happening in the economy overall. After the dot-com bubble, when the stock market crashed, the Fed lowered the rates to 1.5% by 2002 to stimulate growth. That's when the housing crisis began. When rates were low and regulations were loosened, everyone who could take a mortgage took a mortgage, leading prices to dramatically rise. Within 2 years, prices rose by 15%. That's when the Fed realized that the housing market is out of control and it needs to raise the rates before it turns into a bubble. But it was too late. It had already turned into a bubble. From July 2004 to December, it raised the rates from 1% to over 2%. By July 2005, rates were raised to 3.25%. Within the next 12 months, they were raised to 5.25%. That's when the market began to crumble and crashed by the end of the next year. Let's see how that compares to what's happening now in the market. The median house price increased from Q2 2020 to Q2 2022 by over 35%. That's more than double the increase in the last housing crisis. The Fed is raising the rates to stop the inflation, which also includes the housing market. But house prices are still rising. House prices will most likely won't stop until inflation stops, and inflation doesn't seem to stop until the Fed crushes the demand. Since the beginning of the year, the Fed has raised the rates from less than 0.25% up to 2.5%. At this rate, rates can easily cross 5% within the next 12 months. And the Fed can't instantly lower the rates until inflation will stabilize at around 2 to 3%. New house supplies have already returned to pre-2008 crash. Of course, active listings in the market aren't yet back, but a lot of people are still holding into their houses since prices are still rising, and those who have decided to sell aren't getting the best price possible since demand is cooling down. But prices are still rising to a certain extent. Fannie Mae now forecasts that the United States home prices will rise 10.8% in 2022. It still remains to be seen how far they will climb next year, but that would mean an over 50% price increase in less than 3 years. Does that sound to you sustainable? A lot of analysts are saying that house prices are driven by strong demand, but the last crisis was also fueled by strong demand as well. Of course, there were other factors, but remember, each crisis is unique. They're not two identical crises. Bubbles are formed in different ways. The only thing that unites them is the fact that, at the end of the day, they all burst. When Michael Burry shorted mortgage-backed securities in 2005 and 2006, the companies that sold to him these securities consider him a fool. If you have watched the movie The Big Short, you know how people treated him when he was ready to short whatever mortgage-backed securities was available. It took almost 2 years for the housing market to crash after Burry shorted the market. It doesn't happen overnight. Unlike the stock market, house prices don't jump up and down. They usually rise by a few percent to catch up with inflation, or rise dramatically and turn into a bubble and then collapse. It's difficult to make any precise predictions at this point, but it seems like in a year or two, or maybe by the end of the next year, once the Fed raises the rates high enough to crush mortgage applicants, but inflation still remains at around 4 or 5% at least, we'll see house prices cracking down. Mortgage rates already rose tremendously. For the first time since the early 1980s, the average 30-year fixed mortgage rate has climbed 2 percentage points in just 4-month window, climbing from 3.11% in December to 5.11%. The United States has entered into a recession where Fed doesn't have the comfort of lowering the rates. So expecting that demand for homes will keep rising is too optimistic. How long will the recession last is another question. A question that we can't really answer since it depends on so many factors such as when will the Russo-Ukrainian war end? Will China's housing bubble burst? How will the EU, the United States' largest trading partner, solve its energy crisis? And many more. The Federal Reserve has taken the measures to the extreme, printing unbelievable amounts of money in 2020 and 2021, creating a huge bubble. Now it's time to pay back. But the country is facing geopolitical risks that pushing it to take measures that will only worsen the crisis. If it wasn't, for example, for Russia's invasion of Ukraine, the inflation wouldn't be as bad as it's today, since energy and food prices globally wouldn't be rising so much. That's it for today. Thanks for watching and see you in the next one.